Greetings, everyone. I'm excited to welcome Ali Hussain, CEO and co-founder at Tabs. Ali, welcome to the show.
Thanks, Ben. I appreciate you having me here on a wonderful day.
Yeah, I know Friday here, and looking forward to this because this topic near and dear to my heart at Tabs. But first, let's kick this off. Tell us a little bit about your background.
Yeah, originally from the Midwest, spent a good amount of time early in my life thinking I wanted to be an academic, spent some time as a consultant, and then entered just technology companies a good amount of the last decade, mostly more as an operator, Ben. So spent a good amount of, we'll call it the last 6 to 8 years as a COO, deeply involved in like enterprise applications, cloud ERP, CRM, and ultimately just fell in love with where I thought ERP systems and adjacent technologies were going, and ultimately was highly influenced some of the gaps I saw that led me and a team to start Tabs about 2 years ago.
Okay, yeah, appreciate that. And now your journey, were you say technical, like out of school, or on the
I mean,
business
less
commercial side?
technical. I mean, even though I was excited about school, et cetera, like I spent most of my time more in the humanities, learned a little bit of business, had a short stint at Boston Consulting Group, but for the most part, got to actually learn the trade by operating and using tools and technologies and being early adopters, an adopter of other products in the payroll and AP and spend space that got me very fixated on all things revenue.
Yeah, I mean, you can't operate a tech business. A lot of businesses, right, without that, the back office tech. So
Yeah.
and I hold my tech stack survey. It's expanding and expanding everything on there. So, but that's a good transition into your current project tab. So tell us, yeah, tell us a little bit about tabs. What products and or services you're offering?
Yeah. So Tabs came out of this belief that though there are plenty of new billing products, AR products, when you actually look at the broader market penetration, it's still early days. And so in late 2022, I was kind of looking at some of the phenomenal experiences I'd had in AP spend procurement products and broadly came to the conclusion that there has not been similar kind of penetration of platforms in the space around all things revenue. And the big question for me was why? And one of the privileges I had starting to really think about the problem in late 22, early 23 is the world I saw was still very services oriented. So for me in my prior link, I was a NetSuite user using products like Suite Billing and ARM. But at the end of the day, I went through 12 to 18 month digital transformations with a third party trying to custom tool CPQ into billing and RevRec, and just saw a huge amount of human capital and services to get to even a V1 of what I aspired to have. And so in late 22 to early 23, I started to see some of the trends happening in AI and LLMs. And though I'm by no means like an AI bull that everything's going to change in finance over the next year, I started to build a conviction that there was something really interesting from a data ingest standpoint, that if you could actually start building products at its foundation from an LLM first or AI first in terms of how commercial records come into revenue, you could potentially make products that would be more accessible without a ton of onboarding risk to get things up and running. And so that was what prompted the curiosity around Tabs, and excited to talk about where history took us next.
Yeah, and I have a few questions because I saw a demo and really interesting. And yeah, because it's right. I think every SaaS CFO, like at least me, that quote to cash utopia. Now, people call it different things, but it's a
Yeah.
long revenue cycle, and it's kind of like, and sometimes I do some training, like what's going on behind the scenes in accounting and finance, right? We start with top of the funnel, we have quotes and, contracts and invoices coming over to accounting. And then of course, collecting that cash. And it can be a complicated, but probably I'm guessing in your journey, you saw that with different products and ERP solutions of just that disconnected journey, and piecing that together, I think for me is that utopia. And tell us first a little bit about how, and of course, AI, LLM, a lot of people, embedding it into their product or claiming they have some AI functionality. But tell us, after your demo, I was really interesting how you're using it. So, but I'd love to hear from you, like how you're using it in tabs.
Yeah. I think one of the, first of all, I think we're all figuring it out. So by no means we cracked everything. And I think we're going to see a lot of really interesting things over the next couple of years. I think the one thing that's unique about our approach is, I'll say a couple things. One is I generally am a little skeptical of quote to cash. My
Mhm.
belief that CPQ and up to the quote level is mostly a sales and rev ops endeavor. And so early on, I learned in our product journey that I did not want to build a quote to cash tool. I wanted to build a revenue tool, which really starts once the deal is closed won. And so there are a lot of phenomenal CPQ products out there. I think RevOps, obviously finance should be highly consulted, and often deal desk is embedded in the quoting process. But to me, that is going to be something that Salesforce, I see what they're building with Agentforce, HubSpot, others are going to conquer. And I think finance and SaaS tools trying to get involved in that starts to water down the experience. So the first thing I was really fixated on was this idea of, okay, how do you, when you can't control what the final quote or order that is closed won is going to look like, how to use AI in that application? Because that was where I saw the biggest inefficiency, which is either humans translating order and contract fields into a revenue or billing product, or hiring a services firm to custom tool via Celigo or some other integration, which to me was both inefficient, took way too long to go live, often was not accessible to a lot of the mid-market, and required a bunch of ongoing maintenance. And so then I think the thing that we've really done is focused our AI and LLM efforts on that ingest side, which is being native in how you take documents and records in. And the value of that is we've been able to bring down onboarding time, be a lot more agnostic to business model type, but also apply that technology to things like usage or milestones or other variable elements that tend to come up more and more, particularly in where a lot of technologies are going, whether given AI or a lot of pressure on net dollar retention or just the iteration that a lot of businesses are doing. So that's, I think, where we've become kind of unique in how we approach this. I think the more downstream things like AI for Dunning or for Cash App, like everyone's going to figure that out. I think that's going to become more commoditized with more access to this technology. Our uniqueness is on that native beginning of the journey.
Yeah, and I thought it was pretty interesting that from a CFO lens of you ingest that sales contract, the AI LLM works its magic, and then it basically sets up what you need to do on the accounting side. So the rev rec, invoicing, renewals, all that stuff, where you don't necessarily, like you said, quote to cash, don't necessarily need to be hooked up to your CRM system,
Exactly.
to file that process, upload the contract, it sets it up, and away you go.
100%. And there's two values to that, Ben. One is, as we think about building more products horizontally, the access to that data gives us more adaptability. So we can start, I mean, when we started in market, we came out with a order to cash or billing and invoicing product, but very quickly our customers said, hey, it would be amazing to have more rev rec to 606 and more non-GAAP metrics or SaaS metrics or board level metrics. And unlike other tools that would have to go feed into a quoting system or CPQ for more data, we already house that data. So very quickly we could build products horizontally. The second thing that's been really interesting with this approach, with what you said, is then once you control that, you can help drive just a lot more insight downstream in understanding records. So a great example of one of our products is Renewals AI. One of the things we often hear from companies is they don't have very good CRM hygiene. Renewals are the most negotiated terms within a contract. Because it's LLM native, we can quickly pull out the renewal date, the specific terms, the escalator clause, and then bring that back full cycle to the billing term. So that's been really cool. And to your point on not being required to be dependent on Salesforce, my favorite experience is when a deal gets won on and signed in DocuSign, it hits tabs the same minute it hits HubSpot or Salesforce. And so we can run the billing journey even before anything else starts. And those are some of the cool things we can do in like an AI native world.
Yeah, and I love that, especially renewal management, right? Getting those renewals ahead of the time to your CS or AM team to make sure they have time to prepare, big piece of it. In what, the FP&A space, it was hot, hot space and heavily funded. Now it seems every time I looked, it seemed like there was a new FP&A tool. So now it seems like, and I'd love to know how you describe the space, if it's subscription management, revenue management, is there a category we can fit into this? But it seems like this is a hot space, that there are a lot of solutions coming in to try to tackle revenue automation.
Yeah. So the way I look at it is, and again, this is simplifying it, but bear with me a little bit. When I think about the core ERP or ledger, to me, there are four major domains where there's opportunity. One, not only finance, but when I think about payroll benefits, like that type of administration, we've now seen so many unicorns come out in the space. It started with companies like obviously Workday and ADP, but now we have Rippling and Gusto and Deal. The other space that I see is what I see as a consolidation happening in AP spend and procurement. I think 5 years ago, we saw Coupa and Tipalti and others who were playing in AP. And then we saw Trip Actions, which is now Navan and Ramp, and in some cases, Airbase, like focusing on other domains. And we're seeing a consolidation there. And I kind of call that category AP spend and a little bit of procurement. And then to me, there's the other two elements. You mentioned FP&A. I call the bucket we play in kind of revenue. And to me, that is a combination of all things collections, billing, accounts receivable, rev rec, non-GAAP metrics, board metrics, SaaS metrics, but then a lot of downstream insights like renewals, things that ultimately bring the commercial record to finance, which I think historically finance has had to deal with this in a very piecemeal way. They've said, oh, I have to do some billing, but anything else, they've had to play almost CSI every other system. They've had to go to Salesforce. They've had to go to Looker and Tableau. They've had to go to Ironclad or Conga, and it's just not efficient. And so in the world of AI, we're bringing all of that commercial intelligence, which ultimately ties to all revenue records. And that's what I call the category. And so ultimately, Ben, to answer your question, I think there's going to be ERPs that are too big to fail. And so I generally believe QuickBooks, NetSuite, Sage are not going anywhere. Will there be new startups in the space? Sure. But that is a decade-long endeavor. The same way no one gets fired for buying IBM, no one's going to get fired for buying NetSuite. That said, no one's using NetSuite's procurement anymore. That's now probably down to less than 30% adoption on those modules. All of that's gone to Coupa, Zip, Ramp. But where I think why you're seeing so many emerging players in the receivable space is everyone's seeing the opportunity. In a NetSuite user, 80 to 90% is still buying Suite Billing and ARM, which is still a very low NPS product. And so that's where I'm so excited about, Ben, many of the products you talk about, because I think there's so much opportunity for all of us. Our objective is to be the most accessible revenue product for the mass market.
Yeah, I love that because if you have a disjointed invoicing process, rev rec, everything involved there, like, your life is not going to be fun as a CFO or controller in the back office. So important. And on your LinkedIn profile, it mentioned B2B focus. So I'm curious, are you after all B2B or is there specific verticals within B2B where you're finding a sweet spot?
I think like a lot of startups, the big thing for me right now as the CEO is like, how do we keep us focused? I think that's the best word. Where I think the biggest opportunity is B2B order and contract-based businesses. I still believe the best companies across SMB, but certainly the mid-market and enterprise, configure and price deals at the contract level. And our personal internal view here at Tabs is that's like 80 to 90% of the B2B market. And so that is both where we think the largest TAM exists, but where we also think the most inefficiency exists. So if you're running a subscription business where it's simple product-led growth, it's $99 a month, you should use Stripe or Bill.com or something very commoditized because your business is not that complex, but it's also not that unique in terms of the broader TAM. We're going after that 80% that is contract order-based, but also sometimes has usage, sometimes has milestones, other complexity. That's what we think most of B2B deals with and where we are trying to build the most empathy.
So with this, and that makes sense, so self-service, PLG, maybe different type of back office accounting motion, but would you say you're going after then recurring revenue businesses? Are there
I think
other?
for the most part, I think more and more all businesses are trying to find a recurring piece. So obviously SaaS companies are great, but we're seeing similar trends in healthcare, but even in physical products with the advent of IoT, more ongoing services, warranties, et cetera, like generally recurring revenue, I think is the gospel. I think there's a second element to that, Ben, which I'm sure you're observing is there's like recurring, like true SaaS ARR, but there's a lot of other flavors of Baskin Robbins that even the most traditional recurring businesses are adding, whether it's some form of usage, minimum commits, tiers, overages, and it may not be in their core product, but I think everyone is trying to find more margin and more land and expansion opportunities. And just simple SaaS, we are finding even amongst like the most straightforward businesses is just not good enough.
And, we're recording this early January 2025, and we've talked about, like I'm guessing like you're selling into the office of the CFO.
Yeah.
And, how do you find that market right now? Because this is such an important piece of the
Yeah.
CFO's puzzle, talking to other B2B SaaS executives, kind of like, well, 2024, a little tougher market, a little slower, just kind of get
Yeah.
through. How are you finding the market right now, talking to
Yeah.
CFOs?
Yeah. And again, I always say this with full humility. We're in the early days,
Yeah.
but the three patterns where what makes me very bullish is that one is the CFO as a persona has just grown so much in stature and mandate since the COVID era. Like most CFOs are, if not peers, but very elevated, even at the board level to the CEO. So they are truly buyers. And I think that also comes with a lot of responsibility. And historically, CFOs have been pretty selfless and spend and said, hey, everyone, sales, marketing, product, you tell us what you need and we're the last to eat. I think many of them are realizing, look, it's just not plausible to be that selfless anymore. And we need technology. So I think that's tailwind number one. Tailwind number two is many of these CFOs are being pushed to drive more efficient resourcing models in terms of headcount. And so if they need to do more with less, technology is like top of mind for them as a augmentation. And I think in many ways, AI is still far from deep penetration within the office of the CFO, but it is creating curiosity in a way that I think is driving a lot of buying cycles. The third is what I call the great unbundling going on, which is a lot of these CFOs went to one vendor and that was NetSuite or Sage or SAP. But many of them are saying, look, I am having a really good experience with my payroll or procurement software. There has to be something that can be more efficient and automated and insightful at the revenue side. And I think what Ramp and Coupa and Tipalti did for the flow of funds out is now creating a renaissance on the flow of funds. So that's what made our 2024 really exciting and keeps me really bullish for us and other peers in the category for the next couple of years.
And I love those points because as a CFO, I went through that where you become so operational, you're trying to take care, work with the departments within your business and what they need and facilitate, but then you forget about your core, forget about FP&A, finance and accounting, and forget about your kind of own house and keep that in order. Where it's like, yeah, I'm the CFO, I've got to be tight. Like I can't buy tech, I need to help everyone else. But then that's a mistake you can fall into. It's like, hey, that's an important part of the process. Like take care of your department first and then it can help others. And then, the unbundling is interesting because, I've run my, now on my 6th annual tech stack survey, and I have a question there. Do you prefer best of breed point solutions or an ERP? And every single year, despite everyone saying the last couple of years, there's going to be a whole consolidation and kick out all these point solutions, everyone still will prefers a best of breed point solution in that survey.
100%. And I think what people oftentimes at the surface, there's always that surprise. The 2 or 3 things I'm hearing from our CFO partners and controllers is that it's a much better user experience at the point solution level. It is often better from a cost standpoint, not just because the add-on with a ERP versus the point solution is more efficient. The lack of ongoing managed services is huge from an ongoing cost standpoint. And people are just seeing the ROI very clearly. And I think that is sometimes, and I look at your surveys and I think they're excellent, Ben. And I think that's the insight that always resonates with me as the double click, which is like, we're dealing with a very scientific, no BS buyer. And there is something very insightful if you unpack that.
Oh, I love that. Yeah. Selling to the CFO a little different, maybe selling to someone else. So yeah, just give me the facts. How can it help me? What's time to value? But let's talk some stats and figures here and then go into fundraising. So what year did you found Tabs?
Yeah. So we started in early 2023.
Okay. Early 2023. So yeah, like you said, kind of early stages here, early innings. And do you have a headquarters location?
Yeah. We're based in New York, right around Midtown by Grand Central.
And for those who will watch this video, there's a great skyline in the
Yeah,
background. Love that.
around. Yeah.
Yeah. And then what's your current team size?
Yeah. We're about 50 plus right now.
50 plus employees. And then what about scale? I know early stages, and I don't know if you disclose any ARR, but tell us kind of like what scale are you at right now?
Yeah. So we're one of the, like, putting aside even office of CFO companies, we're one of the fastest growing AI companies since coming out of stealth. So a really important value for us is, though we were started in 2023, we spent the entire year designing and developing the product with companies, CFOs, controllers, accountants, operators. And so what that allowed us to do is, we came out of stealth in Q1 of 2024. We were just a far more mature company. And I always laughed. I was like, I wish I could do what Parker did at Rippling and spend 4 years and $40 million. I obviously do not have that pedigree, but I was privileged to have a year. And I think what we were able to do, just be heads down and really build product with some really good, thoughtful finance minds, gave us a really mature product. So though I don't have today revenue figures that we'll share, I will say that in the last 9 months, we have gotten from 0 to hundreds of customers, hyper focused on the QuickBooks and NetSuite ecosystem, and all across all sectors, and are growing very, very quickly. So we are well into, and we will be looking to have a lot of hopefully new excited partners this year.
Yeah, no, that's great to hear. Not an easy product to build, like you said, a little time to get that product out the door. So now we know you're selling to B2B, selling to the office of the CFO. So tell us a little bit how you're finding these CFOs. Tell us a little bit about your go-to-market motion.
Yeah, I think there's three things. Obviously, early on, it's sheer just brute force. Like, you do a decent amount of outbound, but less around like, hey, do a sales demo, more around, hey, what are some of the thoughtful things we see about someone's background and the value they can add to being a partner? So I think that's been super helpful in terms of an outbound motion. I think now we've been in market for 9 months, having great chats with folks like you, Ben, and other just broader networks in the office of the CFO or controllership has been super helpful. So that's helped drive a ton of inbound. And certainly with our hundreds of customers live, we do drive good referrals, either through peers, like the CFO community's tight and is, I think, really helpful peer to peer, but also a lot of directors of finance are getting their first VP of finance role, or CFOs are moving to their next company or getting bought by private equity. And so there's a really strong referral network that I've been very impressed with. And then the last thing that I have deep respect for what Bill.com did and others is really build out the client advisory services. And we are more and more learning that more advisory firms in the bookkeeping, FP&A, finance stack is actually going a lot more up market, and revenue, things like accounts receivable or rev rec, are becoming very difficult for them to manage at scale. And so the same way they look to Bill to do spend an AP, or Gusto and Rippling to payroll, they've been really great proponents of finding automation off of QBO.
Yeah, no, appreciate that insight. And then let's talk about the fundraising journey. You've raised a decent amount of capital. So how much capital have you raised to date?
Yeah, we've been lucky. We had a good, in terms of growth, we raised about $40 million today.
Okay, 40 million. And I think what the last was a Series A for 25?
At 25 to 30, led by General Catalyst.
Okay. So 25 to 30 Series A. So a nice size Series A. And
Yeah.
I track fundraising data for SaaS. I think kind of the median is 14. So yeah, good round there. And so tell us, so seed round, Series A. So tell us about the Series A. What triggers or milestones led you to that Series A raise?
A few things. One, first and foremost, is like, I think we all of us in the space know that this is a really big market. Like, if you just look at the number of QBO, NetSuite, Sage, just in the mid-market, there's a massive opportunity. So for me, it was less about, are we going after a big enough TAM? It was more around, do we have conviction around our approach? And I think early last year, when we both had conviction and we brought it to market and we started some really good demand signals, that made us feel good. And some of our amazing investors feel positive that we were ready to double down on this strategy.
Okay, it makes sense. Yeah, you know, it's a big market. And it sounds like when you say conviction, like you were seeing signals, some product market fit that said,
Fast velocity in terms of customer, both adoption and experience. And then you start to see some of the, obviously there's metrics that your customers use to measure their business, but we start to see certain adoption metrics. Are they using the platform every day? Are they getting significant ROI, both in terms of efficiencies as well as days to collect or average days to collect. And then on top of that, start to see some really powerful reporting along some of the FP&A side, like cash forecasting and predictive metrics there, as well as start to bring on more GAAP and non-GAAP metrics such as deferred revenue and some of the really fun SaaS stuff you can talk about.
Yeah, no, I love that SaaS stuff. So, and then for the SaaS founders listening who may, a lot of seed rounds out there helping SaaS companies. So any fundraising lessons learned along that way with the Series A?
Yeah, I'd say a couple things. One is just simple. I think one of the things I've had to learn is that the more simple you can communicate your value prop, sometimes as a founder, it doesn't feel as satisfying because it's not itching all of the parts you're excited about. But I think simplicity is number one. Number two is, to the degree what you are selling starts to feel like what you are pitching from an investor standpoint, that's a really good signal. Because if you feel such good conviction on what you would pitch to a controller or a CFO or a head of finance, and that starts to really resonate, that can be the same thing to an investor. Like, investors are very pragmatic, commercially oriented folks. And I think they actually really like that. And I think the third one is, like, you got to have the core demand signals. Like, I would say the one thing that is really unique, both in 24 and certainly in 2025, is like, you got to show that there is a buyer, they are willing to pay, and that there is a healthy both ACV within the existing buyer, but there's some really interesting expansion opportunities. So I'd say those are some of the things, hopefully nothing too unique, but just as straightforward as possible.
Yeah, no, that makes a lot of sense. And what are the expectations around the finance side and any metrics or financial SaaS metrics that you have to show at that Series A?
Yeah, I think a few things that's really helpful is just the ability to demonstrate pipeline. I think that was one of the unique ones, which is folks want to see that you have figured out how to drive demands. To your point earlier, like with the office, it's a big TAM, but do you know how to get to that? Is there a repeatable playbook that as you move from founder-led sales and potentially give some responsibility to other folks on the team, whether it's marketing and sales, can they repeat kind of that founder mode and that pure brute force that you did in the early days to something that's more scalable? So I think pipeline actually is something a lot of people miss out on. Second is like core just revenue. Like, I think ARR, things that Ben, you and I are both excited about, ARR, CAR, like showing that you understand it and you have clarity on what you've achieved to date, but also where you're going. I think the third one, there's really cool opportunity for you to show off your product and say, look, like, not only am I doing something in the broader SaaS space, I can show it to you in my product, and your ability to dog food the product and feel really good control over understanding the problem yourself, I think is that last mile. And like, to the degree, I think almost all of your listeners, myself included, get to use our products every day, show that off. It's like really cool. A lot of founders and other adjacent technologies don't get to use it every day, and you should walk the walk.
Yeah, that's the fun part, especially if a product that you would, you're using internally selling to these, just you can see how it
Yeah.
works and maybe, oh, I didn't realize I was doing that or it needs to do that. So we'll appreciate that fundraising insight. And then, Ali, at this stage of your journey, do you have a favorite number metric that you're focused on to guide the business?
Yeah, I actually really love cash forecasting. I think I mean, obviously there's ARR and a bunch of SaaS metrics, Ben, but I think the one thing I've learned talking to a lot of my founder or CEO peers is that ARR is only as good as how efficient your book to bill and your collections are. And you learn a lot about your business, seeing how fast and how you collect. That could be unlocking the value of a business model. Is it better for me to do annual licenses versus quarterly, or how you think about discounts versus margin? And so I can't get my day started without looking at my cash forecasting. And we've built some cool things at Tabs, like a collections Kanban that gives you very specific insight into what matters, who's already paying, don't worry about it, it's just coming pending via an AP portal, and where do you need to really escalate your efforts. And I think even at the Series A, the the feeling you get, the rush when you collect on time, and prove that you're not only booking, you're bringing in real revenue, even if you're still funding the business through venture capital, is the most fun and positive sensation.
Yeah, I love that. Yeah, it's just a given cash forecast, cash runway. And you mentioned an important point, especially for me, like Invoicing is a great thing, and you've got to do invoicing right. You got to be disciplined. The invoices have to go out the door at the right time with the
Yeah.
right products, the right pricing, that starts that collection process. Because yeah, it's just, and you learn it like, yeah, early stage SaaS or as a small business, that's really important. Once you get to maybe 30, 40, 50 million, and you have nice cash flow going, nice cash balance, maybe you can, absorb those working capital cycles, but early
Yeah.
stage, yeah, get those invoices out the door.
100%. Ben, I mean, you'll appreciate this. In the world of AI, everyone thinks that you'll get paid faster if you have more Dunning tricks and more AI and AI agents and phone calls. The number one reason our users don't get paid on time is they don't invoice on time. And I think why products like ours have opportunity is the minute a deal is closed, one, you never miss your invoice date. Whereas the status quo in most companies is that end of quarter, 30 deals get closed. Finance has monthly close, board meeting, everything. And if you're 2 to 3 weeks into a 30-day invoice cycle, if that AP team gets it on day 21, they're not paying in 9 days. Like, it just makes no sense. And so that type of rigor, whether through technology or really good discipline, is table stakes. There's no golden formula or party tricks needed.
I know, and I love that because the due date doesn't start ticking until you get that invoice out the door. So it gets, just that old fashioned invoicing and process. So I love that. So Ali, I really appreciate your time sharing your journey so far. As we wrap up, what's coming up next for Tabs?
I think it's just, I mean, we're just excited to now be a slightly more established player. I think, as you know, for most founders, like those early days are hard. No one knows who you are. You have to build trust. It's all about relationships. I think having now that first year in market under our belt and a lot of great customer stories and validation and what I feel like is a really, really solid product. And I get to be I use it every day. So I get to hopefully put my bias away and actually see it. And so I think what's ahead is like doing a little bit of the same, just at a higher scale. And we've brought on some amazing folks to provide more thoughtful solutioning and marketing and product marketing and ways to add value to our partners, and just excited to double down and bring the experience to more B2B finance teams and operators in 2025.
Well, look forward to watching your journey. So Ali, really appreciate your time sharing your journey and Tabs journey so far. So if listeners would like to learn more, where should we send them online?
Yeah, so definitely go to our website, tabs.inc. That would be great. But I also love to connect with listeners directly. So feel free to also email me. It's just Ali, ALI, at tabs.inc. And so would love to directly download the product myself and meet more of your viewers, Ben.
Oh, that's perfect. So check out tabs.inc and then just email Ali directly, ALI at tabs.inc. So again, Ali, really appreciate your time and sharing your journey today.
Awesome. Thank you so much, Ben. And I'll see you soon.
Thanks.